Let's bring in CNBC contributor Tim Higgins, reporter with the Wall Street Journal, and George Giannakaris with Canaccord Genuity. He currently has a buy rating on Tesla with a $304 price target. George, you're a little more optimistic than some of your peers.
Look, our view is a 12-month to long-term view, and we think that the company is incredibly well-positioned to take advantage and leverage the EV revolution. But that doesn't mean that near-term, we've talked about in several notes, some of the breadcrumbs that have been out there that we and others have picked up that would lead you to believe there's been a demand slowdown, at least in China. And we're also worried about a potential air pocket in the fourth quarter in the U.S. from consumers if some of them wait for an EV tax credit to kick in starting in 2023, which, by the way, Tesla buyers haven't had available to them in full since the end of 2018.
But George, this may come back for those buyers, you say, after the start of the year.
Correct.
That's the plan.
Yes. So we're worried that if some buyers decide not to take advantage of Q4 buying period and wait till that credit comes back, that may kick in some demand and push it out to the first quarter of 23.
Tim, is the stock being punished overly for the kinds of hairballs that we cited there in the intro? In other words, delivery snags, production snags, questions about whether Mr. Musk is sufficiently focused on Tesla or not. Why is the stock down as much, or is it just basically the market is down, or are they over focusing on those hairballs?
Well, I think there's a lot of drama around the stock and Elon in general. You've just laid out a whole heck of a lot of distractions and issues before him and the company. But, this is a growth stock. It's long been a growth stock story, and it comes down to the issue of supply and demand. Real concerns about the demand going into the end of this year and into next year. Tesla, for a long period of time, has said it's always been a supply issue for them, that there's plenty of demand out there. They just can't make enough cars. Well, now it's really going to be tested. They've got these factories in Germany and Texas coming on the line. They've got China really ramping up. And now we're going to see, are there people out there who want to buy this vehicle, the Model 3, the Model Y, at these high prices that we've seen over the past 6 months, past year? Or will the company have to slash prices? Will the company have to slow down production? Will it be able to keep this 50% annual growth rate towards becoming the world's largest selling automaker? And that's the real question.
I'm curious about China because it's largely seen as the growth engine for Tesla. And yet we just saw Xi Jinping double down again on this zero COVID infection policy, which has hurt the economy in China. We have seen the delay, and we don't know when they're going to come out, of new economic reports out of China. So, Tim, what's your sense of how the uncertainty around China plays into Tesla's immediate future?
Well, I think we've seen some investor concern over the last week or so trying to parse its numbers, what the level of demand for Tesla vehicles is in country, especially as they've been ramping up production. And, that is kind of playing out in the fact that you're seeing the amount of time it's taking to get vehicles to customers decrease to several weeks from several months. So that's raising concerns that maybe demand is slowing, which could be a huge problem for Tesla if that's really the case going into next year.
George Giannakaris, and I just want to use your last name to show that I can pronounce it, damn it.
Well done. Better than my mom.
Right. Give a second time the charm. Let's
Two-take Tyler.
Two-take Tyler, they call me. So let's talk about currency, which you don't think of necessarily as a Tesla headwind, but it could be, couldn't it?
Sure. We've had a lot of strength in the dollar, to put it mildly, and the company sells plenty of vehicles outside of the United States. And so there might be some, near-term issues around currency and the translation there. We don't think it'll necessarily be a profit issue, but maybe some demand destruction or revenue destruction in the near term. I do want to say, though, just to point out about the demand and what they'll produce next quarter. We think that the whisper or the bars around 400,000 vehicles for Q4 deliveries, we think they'll get that done. But the real nuance here is the commentary on the call, which will be incredibly important to listen to. Orders are not a metric that Tesla reports. And we'd like to hear from them about what they're seeing out there and how the second derivative of order growth has changed, if at all. And that's really up to the company to tell us about, and for Elon Musk to report back to us. And just another final point to make here too, that what we're debating here is really whether or not whether or not Tesla will grow by 50 or 40 or 30%, but we have a high degree of conviction that they will grow. And so if we do have a recession, or we're currently going through a recession, it will likely moderate Tesla's growth. But competitively, this may be a really good opportunity for Tesla to do much better than their competition, who may have a lot of difficulty going into a recession.
All right. We've got a 304 price target, the stock in the 220 area right now. George Gianarikas, they have even spelled it phonetically for me in the teleprompter. That's how much confidence they have in me. And Tim Higgins, go ahead, sir.
Well done. Thank you.
All right. Tim Higgins, thank you as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.